Is there a dividend ETF that can beat the S&P 500 and provide a great yield? Or is there one that's got good yield, good total return, and can be one of the best ETFs to hold on to your portfolio? You know, most people think about, when they think about good dividend ETFs, you think about SEHC, VYM, DGRO. But these have kind of slacked behind the S&P 500. There is one ETF on the market that's got a good yield and good total return, and it's been beating these guys for the last 5 to 8 years. What could it be? And it is FDVV. That is the Fidelity High Dividend ETF. Now, in today's video, we're going to be talking about FDVV. We're going to be talking about if I like it. We're going to be talking about some of the good, some of the bad, and what you should think of when you're looking at some good dividend ETFs. Now, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more and invest better. And if you like this content, make sure to hit that like button and subscribe as we continue to create great content to help you to do better. Alright, in today's video, like I said, we are talking about FDVV, and that is the Fidelity High Dividend ETF. Now, this dividend ETF has been around since September 16th, 2016, so not that long, about 8 years, and it's continued to grow and grow on people's minds. And you know why? Because it's got a great performance and it's got a high dividend yield. It's got the expense ratio of 0.16%, which I've already explained. It's got a yield of about 3.22%. Now, in Seeking Alpha hasn't really updated for that yet, but it did a reconstitution that took place on March 3rd, 2025, which added more dividend-paying companies with higher yields. Now, it takes a look at 3 different types of metrics, and the first metric is the dividend yield. So it looks at the dividend yield based upon the trailing 12 months, and this is what makes up 70% of this ETF. Next, we're going to look at 15% of the ETF is based upon the dividend payouts, and then the next 15% is based upon the dividend growth. Net dividend growth is based upon the trailing dividends of the trailing 12 months. So this is what kind of makes up this dividend ETF. Now, with a lot of different ETFs, we're not looking at just the 12 months. We're looking at 10 years. SEHD looks at the last 10 years of dividend growth, 10 years of dividend yield, and just to make sure this company that's being added to SEHD kind of matches those and has a stability of blue chip stocks. Now, with FDVV having looking at kind of these different metrics, you're able to kind of create kind of this thing called a barbell strategy. One is going to have a lot of different growth in the company, not the dividend, and the other is going to have more yield. So it's a barbell strategy creating balance. So you're going to have a lot of tech and you're going to have a lot of blue chips. And so what happens is the total return is going to skyrocket up, but you're going to still have blue chips to kind of bring that balance and add yield upon this, creating a great dividend ETF that kind of has a little bit of balance. So what we're going to do is we're going to take a look at Seeking Alpha. We're going to take a look at seeing kind of the summary of this, the holdings. We're also going to look at kind of how it compares to some of these dividend ETFs, and then kind of do a little bit of back testing, see what the performance is over the long term. So let's go over Seeking Alpha and take a look at some of the holdings, taking a look at kind of the metrics compared to some of these other ETFs, and then take a look at the performance. Let's go. All right, we are on Seeking Alpha, and so let's take a look at about the summary right now and showing like 1 year, which is 15.34%. And we've got the yield saying 2.86%, but with the reconstitution, it's going to be about 3.22%. And let's just take out the holdings just to kind of get a little bit of it. So you got technology making about almost 23% with financials, which is good because they just added a bunch of financials today, and they're throwing in some consumer defensive, and you got real estate, so you got a couple REITs in there, so that's giving you some non-qualified dividends, but most of these dividends are coming from qualified companies, so that's a good news to you. And you got some utilities, so you got real estate and utilities. All right, so we got top 10 holdings. We have Apple, Nvidia, and Microsoft. Wow, those are some great tech holdings. You got JP Morgan, which just got added, Visa, which just got added. You got Procter & Gamble, Coca-Cola, Exxon, Broadcom. And as you can see, these total of holdings only make up about 30%, which is great. Out of the 100-day, if you look at like SEHD, I believe the top 10 holdings are making maybe about 42, 43%, and this is making about 30%. So it's very well diversified within this portfolio of 100 different holdings. Now, if we take a look at the dividends, which is very important to me, when we're looking at a dividend ETF, the yield, C plus. I mean, it's average. It's okay. Like I said, it should be around 3.22%. Probably after today, after it takes a look. But the growth rate is kind of embarrassing. I mean, negative 7.66%. That's not so good. The 3 years, 10.55%. SEHD is about 11.59% over the last 5 years. And the 5 years, 2.87%. Now, it's only been around since 2016, so we really don't have it 10 years. And it's got consecutive dividend growth rate of 0 years. So that's a big F. And it's paid dividends 8 years, so that's good. We need those. But if we take a look at the dividend growth, and this is where it kind of gets a little embarrassing. I mean, it started in 2016, 27 cents, but as you can see, it goes up, and then it kind of goes down a bit, up, and it goes down for 2024. 2023, you get $1.59. 2024, $1.47. So that's kind of that dividend growth, and that's kind of the thing. We're kind of looking and hoping it grows over time and continues to grow over time. But let's look at kind of the charting and see what's going on with this. So right now, this has got it's got the S&P 500, but let's quickly add some different metrics. I'm going to make sure it's a total return instead of price return. That's good. We are going to look at SEHD. We're going to look at DGRO. All right, so let's take a look at the charting of this. Now we got FDVV versus the S&P 500, SEHD, DGRO, and VYM. Now I added DGR and VYM, just kind of giving it a little perspective. DGRO has usually a pretty good return, but the yield is about 2.19%. VYM's return is like 2.8 something percent, while FDVV is kind of on par with VYM in terms of yield. But as you can see, I mean, SEHD is not doing well for the 1 year, and FDVV is beating the S&P 500 and beating everybody else. So that's good news. Now let's take a look at 3 years. 3 years, as you can see, FDVV is once again beating everybody, but the S&P 500 is beating SEHD. DGRO and VYM are doing pretty good, beating SEHD. So SEHD has kind of fallen off kind of those last couple years. 5 years, this just gets a good performance. SEHD and the S&P 500 kind of neck and neck. FDVV is beating everybody on this list, which is that's wow. That's like a interesting fact. You're looking at it and you're like, wow, this is amazing. Let's kind of look at when it started. All right, so I'm going to chart it off to about September 16, 2016. Let's take a look. All right, so here is the original time when FDVV started. And as you can see, FDVV and the S&P 500 are still neck and neck. SEHD is not too far behind. DGRO is actually doing better than everybody. And VYM is kind of lagging behind. That just shows you that FDVV has a great total return compared to everybody else. That means it's got a good return, price return, plus it's got those dividends reinvested for the long term. And that's just good news for you. Now, if we really wanted to kind of back test this and see what it is compared to these other ETFs, these other dividend ETFs, we're going to take a look at a great backtesting tool. So let's go to my backtesting tool and let's take a look at what it's going to look like in the last couple years, how the CAGR is, how it's grown, and see, what the years are, and just seeing how it's performed year by year. All right, let's take a look at that. Now, the backtesting tool I am going to use is called Testfolio. I mean, you can see it on the screen, and so I'm going to show you guys how I use this. So I am start dating it, like I said, September 16, 2016 to March 3rd, March 4th. Maybe I'll make that March 3rd, as we haven't made it to the 4th yet. There we go. I'm going to start off with $10,000. We're going to have $1,000 monthly invested. I've got FDVV as my first portfolio, 100% in there. SCHD with my second portfolio. And DGRO with my third portfolio. Now, what we're going to do is we're going to make sure we're going to backtest it. Boom. It's backtesting. It is completed. And let's take a look at the summary. So as the summary, the ending value, FDV has the most money right now. It's got 213,000 with DGRO being second and SCHD being third. And when we take a look at kind of the max drawdowns, FDVV, I mean, these are just happen. But if we take a look at kind of the annual returns, it'll start to make sense when we look at seeing FDVV beating everybody else. So we start off, everybody's kind of even. Then we have SCHD kind of dominating with DGRO. SCHD and DGRO had kind of poor 2018, while FDVV only lost a 1.25%. Not too bad. Now 2019, you see DGRO doing great, SCHD doing great, and FDVV not so bad. 2020, like I said, SCHD is doing great, DGRO. But once we get to 2022, we can see that past 2022, that tech market has really propped FDVV up. I mean, you can see 18 to almost 22%. That's amazing. And then you look at it, and it's got 213%, while SCHD kind of didn't do too well the last couple years, and you can see by the total performance. Now, this is just kind of a great look at these portfolios. It's showing you that FDVV has had a great total return with those investments and those dividends reinvested. With that barbell strategy, you are able to take control of the tech and dividend yield. Now, is this a dividend ETF for me? Well, to give you my correct answer, and the answer that I'm going to stick with is, it is not. Now, the reason it is not is because I'm creating a 3-fund portfolio. I've got a good core made with like VTI. I'm going to add some tech, which is VGT. So that's my tech portion of my portfolio. Now, to even it out and to give you more value, I'm adding SCHD. Now, SCHD, it has dividend growth over 13 years. It has grown its dividend 11% over the last 10 years. And it's got pretty good performance, but not as good as DGRO or FDVV. And it's got a better yield. If you're looking for maybe one ETF that has like tech and dividends, FDVV could be that ETF for you. Now, it's not for me, but that's okay. But I'm just breaking down kind of FDVV and showing you what the goods are, what the bads are, and let you make the choice on what you think. Now, let me know in the comments, what do you guys think about FDVV? Would it be something you would hold? Do you like it because it's got total return that kind of outperforms a lot of great ETFs? Or would you prefer like a more stable ETF, kind of like SCHD? Well, let me know in the comments, and we'll see you next time.